Good morning, ladies and gentlemen, and welcome to CNBC TV 18 and Indian Overseas Bank present the Financial Inclusion Agenda, co-presented by Allahabad Bank and powered by the State Bank of India. To get the ball rolling, I'd like to invite the managing editor of CNBC TV 18, Shireen Bhan, for an opening note.
We're here talking about financial inclusion. There's been many people and many committees that have been set up by the government of India to look into the issue of financial inclusion. Let me quote to you what the Rangarajan Committee said in 2008. They defined financial inclusion as the process of ensuring access to financial services and timely and cost. Now, in recent years, as we've seen, financial inclusion has become a priority not just in India, but also in several countries around the world. It's important to understand that financial inclusion is a means to an end, the end being development. Now, according to research done by various economists, countries with a high level of human development are also those with a relatively high level of financial inclusion. So in fact, financial inclusion index and the human development index move in pretty much the same direction. This also means that we need to look at the issue of inclusion holistically. When we're talking about a holistic picture, let's talk about physical infrastructure. If you have adequate physical infrastructure, which means roads, telephone, internet connectivity, that is also equally crucial to driving the agenda of financial inclusion. So let's not look at financial inclusion only as opening a bank account, only as sending a banking correspondent into an unbanked area. Financial inclusion needs to be looked at more holistically. It needs to include things like employability. It needs to include things like education. Before I conclude, as we are talking about financial inclusion, we're talking about equity, we're talking about equality, let me leave you with a thought. As I mentioned, financial inclusion and the agenda for a more inclusive society can only be driven by growth. A nation is progressive not only when the poor have cars, but also when the rich learn to take the bus. Hopefully, we will strive to be part of a progressive nation that can indeed allow the poor to move up, but will also allow the rich to look below. So with that, I'm going to invite our chief guest for this morning, Salman Khurshid, to address all of you before we get started. Once again, many thanks to all of you for joining us here.
Good morning, ladies and gentlemen. I'm deeply honored to be here at the CNBC TV 18 event on financial inclusion. Now, I know that I am in a gathering of people who are vastly experienced in any of the things that I'm going to say, but I just want to give you, not articulate to you those steps that have been taken by government as part of financial inclusion. And I think that is very, very exciting array of things that could be said. The UID and the direct benefit transfer being two very important parts of that interesting narrative. But that's something that you are familiar with. Also government policy and emphasis on social inclusion, how we are working in various schemes to ensure that credit is available, particularly in the rural sector, in the agricultural sector, that credit is available, inexpensive credit is available, and there is convenient and easy access to credit. I will like to talk to you essentially about two dimensions of inclusion. This is true about social inclusion that we have tried to do in many forms. This is true about financial inclusion. Social inclusion and financial inclusion must go hand in hand. The relationship of equality, equity, and efficiency, the three E's, if I might put them to you, I think are critical to the thinking of our government, as indeed they would be to the thinking of any liberal, market-oriented government that wants to provide an adequate social safety network or social security network, even as you explore the potential of the market and of each individual to become an effective and successful player in the market. People assume that this is like charity, this is like altruism, or this is like a good conduct, a humane conduct towards the less advantaged. Now, I think that's true. It's true, but only partly true. This is not the entire truth. The entire truth is that you're unlocking the potential of individuals to add to the bulk and to the muscle of the market. So every time you bring somebody into the banking system, it is not as though this is exclusively a welfare function, and a welfare function which is based on our philosophical understanding that the whole world is one family, and that it is the obligation and duty of those who are placed better off in the family to look after those who are disadvantaged, weak, and undernourished and underprivileged. Thank you very much.
Moving on, our next speaker is the Chairman and Managing Director of one of India's leading banks, and he's here to share his thoughts on financial inclusion. Please welcome the CMD of Indian Overseas Bank, Mr. M. Narendra.
It is a great pleasure for Indian Overseas Bank, along with the CNBC TV 18, to present to you, along with the Allahabad Bank and State Bank of India and other bankers, a very important topic, financial inclusion agenda. As you are aware, I am a believer that along with the financial inclusion and the social inclusion, there should be economic inclusion. And in that, as rightly mentioned, merely giving access to the banking would not allow us to make the full impact of financial inclusion. For that, having the banks in the last 2 to 3 years, along with the initiative by the Government of India and our regulator, Reserve Bank of India, the banks have carried forward the necessity of covering as many villages and later followed by the basic savings account, then providing at least 5 products, that is the remittance product, saving product, also a credit product, and in terms of insurance and other mutual funds. In that respect, we have a long way to go. So it is the time for capacity building and ensure that they get a right to economic life, they get full empowerment, and they will also get full employment, and they have a right to have dignity of life in this our world. Thank you.
Coming up after a short break, eminent bankers discuss the opportunities and threats on bringing the unbanked into banking. Stay tuned. It's now time to dive headlong into our first panel discussion of the day, bringing the unbanked into banking, the opportunities and threats. Now, it's a known fact that out of the more than 1.2 billion Indians, a large number do not have bank accounts. Well, our first panel discussion will look at how banks are planning to bring the unbanked areas of the country under financial inclusion.
Let me start off by asking our bankers and our expert here, financial expert here, what has been the actual achievement of this big Aadhaar-led bank account opening movement from 2011 to 2013. What is the exact percentage or even ballpark percentage increase in the number of bank accounts and number of the banked? Mr. Krishnakumar, that question directly actually falls to you. Whatever State Bank of India does, you can safely extrapolate for the rest of the banking system. In your opinion, from 2011 to now, how many more could you bank? How many fresh bank accounts could you open in the unbanked areas?
Number of accounts which we have opened in the last couple of years, especially what I would call to the smaller accounts, the smaller savings bank accounts. In the last couple of years, we have probably increased it by about 2.25 crore accounts, of which at least 2 crore accounts have been opened by the what we call the business correspondent model. So in the last 2 years, while we have a total of about 18 crore or 19 crore savings bank accounts as a whole, for the bank as a whole, at least 2.5 crore would be on the smaller savings side, of which about 2.25 crore accounts have been opened, especially in the last 2-3 years. May not be 2 years, maybe the last 2-3 years.
Roopa, CRISIL has developed a financial inclusion index. What is it indicating in terms of increase in inclusion?
The financial inclusion index actually is a very simple index developed on exactly the same lines as the UNDP's Human Development Index or the World Bank's Ease of Doing Business Index. So there, 0 is the minimum and 100 indicates the ideal state. What this index is trying to measure currently is the state of financial inclusion as defined by access to banking services. Bear in mind that at this point it doesn't include other intermediaries like NBFCs or microfinance institutions, which actually play a very big role in financial inclusion as well. But as and when we get data, we will include that. Now, if you look at this index, we have computed this index for each of the 632 districts in India. So it is a very granular index. It can be aggregated to the state level, to the regional level, and the national level. Here's what the data is showing. The index value as on 2009 was 35.4. And by 2011, the last year for which RBI data is available, the score has improved to 40.1. I expect that when the data for 2012 becomes available and given by the data that you gave just now, to see an improvement in that number. What is also very important to point out is that 618 out of the 632 districts and union territories in India have shown an improvement in their score in the last 2 years. What is interesting to see in this number is that the biggest increase has been in the deposit penetration. So while the overall score has gone up from 35 to 40, the score for deposits has gone up from 39 to 48. Whereas the weakest feature as far as financial inclusion is concerned is the credit penetration. There the scores are the lowest.
Very quickly, Mr. Narendra, has your growth in fresh branches been as good as State Bank?
Yeah, in our bank also, we have more than 50 lakhs basic savings account. Each year we open around 12 lakhs fresh savings accounts. On a daily basis, if we are opening the general accounts around 20,000, out of that, around 40% is basic savings account are being opened. And I'm very happy that our transactions are also very, very substantial. In a period of these 2 years, we have been able to have substantial and the operations in the account also. On an average, there will be monthly at least 200 transactions in these accounts. And we were also able to cover them. And I agree with our Roopa Kudva's that there is a necessity to capacity building as far as the credit penetration is concerned.
Okay.
Yeah.
Now, well, Mr. Tiwari, question to you is the latest model that we have, business correspondence model. How many business correspondents do you have? And is the model succeeding?
At the ground level, what we have found the change in the mindsets of the people at the branches, what you referred as a financial violence, they have accepted this as a fact of life unless we take this in the most sacred, holistic manner, we can't survive in places where we are predominantly present as a banker. 60% branches are in rural semi-urban areas, number one. Two, growth which we have got, without getting into the number details, it has come predominantly from those accounts. And they are not really no-frill accounts. They are not really no-frill accounts. The low-cost savings, it's coming from them. And percentages as good as what Mr. Narendra said. Coming back to your BC model. Look, BC model, we went through the corporate correspondence. Now, corporate correspondence, we as a public sector banks or nationalized banks, we have a holistic approach, whatever is the government's priority. We do it from within, not as if something which has been imposed on us. Having said that, now this entity, which is the corporate business correspondent, he would look at the economics. So when they did their quick or detailed analysis of opening BCs, they thought it would be workable proposition over a period of time. It didn't happen because transaction didn't happen. So unless otherwise, we multiply what we get to do through BCs, whereas he is able to earn more, it may not work to the level we had expected about.
As to when do you think we could get to 100%? Or do you think we should not go that way? Because as you say, there is no money to transact. So we must chase goals which are realistic and which make sense. What do you think should be the realistic goal? Well, Mr. Narendra, the MFI model has wanted the cost of money to be 24%. Their belief is, and they are not working on subsidies. They believe that if they're allowed to lend at 24%, they should be able to break even. Would you say that the banking community must come to some such a figure? I don't know if 24 works for y'all or what works for y'all. That it is better to work towards a commercially viable number so that at no point in time you're doing it because it is a mandate. You're doing it because there is, at least you're not losing money on it.
I do believe that MFI has been a very, very successful model, and they were able to reach out larger number of beneficiaries. And as you rightly mentioned, their cost would have been higher to the final beneficiaries, but there were quite a lot of reach and connectivity, which would have been resulted in better inclusion. However, due to the certain excesses and the fact that the governance issues, they have been not be able to come up to the final expectation. As far as the banking sector is concerned, as you rightly mentioned, what should be the level of final interest we should charge to our beneficiaries? This goes by the sectoral issues. Suppose it is agriculture, today with the necessary incentive coming from the state government and the central government, the final rate we charge will be up to a certain amount. It will be up to 10% or maximum, but still we believe that the agriculture sector has been able to get us a fairly good return because banks operate along with quite a lot of CASA, and the benefit of CASA should get into the lower such customers. So I would believe that whether it is agriculture, whether it is a micro and small, and even of course in terms of education or rural housing, we must able to give them a slightly better benefit, and we cannot go by only the cost. And we have not seen that it has resulted in any greater cost-to-income ratio. In fact, in every bank, currently the cost-to-income ratio has been on the decline.
A branch opening. What according to you has been the benefit from that, Mr. Krishna Kumar? Per force, you'll have had to open branches so that the money can be transmitted. Are you able to milk it for returns?
What's happening in State Bank of India is that to begin with, the Aadhaar-linked accounts are still not much because in many states, Aadhaar is not really taken off in a big way. So wherever Aadhaar is taken off, yes, we have got the accounts linked to the Aadhaar. But Aadhaar is not the game changer here. The game changer has been just the fact that we've opened branches and opened accounts through the business correspondence. Now this DBT and the DBT LPG, the two schemes you're going on, definitely they have helped in building up the number of transactions and building up.
Have they built a float like Mr. Narendra was saying?
Yes, they have. That is one of the reasons. But having said that, I'd also like to mention one point that we find that about 30% of such accounts opened by business correspondents are again becoming stagnant in the sense of no operations. Because once the benefit is coming in through DBT or the DBT LPG, the person withdraws some money and then forgets about the account for some time. Now that is maybe because he or she in that village doesn't have enough investable surplus to put into that account as a savings. So that is a different question. The question is how do you uplift the economic status of that person in the village so he gets some surplus to put into the account.
Final word from you, Mr. Tiwari. You are banking the unbanked because of government payments having to be made through bank accounts. Is there an opportunity there? Has your bank been able to milk anything from that accounts which have to be opened anyway?
I'll disagree with the word milk. For the simple reason, we public sector, we have got in our DNA. When we open our normal branches, do we do the same kind of economics that it should be profitable in first 6 months or 1 year? We know historically it's not been profitable in first 18 to 24 months. So that much of time we have to give to this kind of...
I take your point. I'm not talking about profitability.
Coming about DBT money.
What are the opportunities?
Okay. Coming to DBT LPG transfer, some bigwig from Raisina Hill made a statement about 2 years back that if we have to reach 1 rupee to a person at the end of the road, we have to spend 3 rupees. Right? Not only I'm talking about that 1 rupee, I'm talking about my 3 rupees. So if I sit back, I'm losing on a very great opportunity. I must be part of this holiest of the banking initiative, for sure. And that is, we banker particularly are sure is going to be a great game changer.
We are at the end of the discussion. One final word from all of you gentlemen as to when do you think we could get to 100%, or do you think we should not go that way? Because as you say, there is no money to transact. So we must chase goals which are realistic and which make sense. What do you think should be the realistic goal, Mr. Krishna Kumar?
Well, I think 100% of the people in this country having a bank account is a dream, it's an ideal. And probably dreams and ideals sometimes don't come true. So I would rather think that we should look at it from the point of view of what we talk these days, that is one account per household at least should be there.
Look, when we talk about economic growth of the country in the terms of GDP numbers, ultimately, unless otherwise we touch the hearts of the bottom of the pyramid, it would be short-lived. We see it's one of the greatest opportunity. 100%? No. It's neither expected as of now when we are speaking, nor doable, because ultimately what we are going to get again out of that, one account per family, yes, that should be our first milestone for sure.
See, this coverage, what we are mentioning, national level is different. Each state-wise is different. There are quite a lot of states. Take, for example, Kerala. They have reached 100% financial inclusion. Neighboring our Pondicherry, they have reached 100%. Tamil Nadu is likely to reach within the short period 100%. There are certain states where, due to the, as you rightly mentioned, the transport communication, and one more thing is the network communication also we are finding that whether it is a government source or the private source, they are not being able to completely put the cable. And in some of the branches where we are now opening in rural areas, our computerization becomes difficult due to lack of communication, these lines. So I think in line with the government policy, in line with the private initiative or the bank initiative, other infrastructure bottlenecks as well as the reach has to take place. That's why I talk about it is not only financial inclusion, it is the economic inclusion and infrastructural inclusion.
Yeah, I think clearly, inclusion it has come to the forefront of the agenda as far as the banks are concerned, particularly the public sector banks. I think there is no doubt about that. You can see it very clearly, very visibly. I think as far as the goals are concerned, I think the three gentlemen here seem to be in agreement, and I don't have any disagreement with them. But I would just like to add the caveat that I think that the goalposts will necessarily keep shifting. So I would much rather talk of them in terms of milestones. Like Mr. Krishna Kumar said, the first milestone is deposits for every household, and then set the next agendas. And I think finally we will I hope that in this country we get to a stage where within the next 5 years the dialogue is not about financial inclusion, but is about financial depth, which is a wholly new story.
Gentlemen, I appreciate you taking time out for us today. Roopa Kudva as well. Thank you very much for joining us, all of you. Thanks a lot.
Next week, the discussion continues as Dr. K.C. Chakraborty, Deputy Governor, Reserve Bank of India, and Mr. Arun Tiwari, ED, Allahabad Bank, give their viewpoints on financial inclusion, followed by eminent bankers brainstorming on adopting innovative tools to spread financial inclusion via technology.